Hello traders, you're welcome to my video on the range action verification index. If you're new here, don't forget to hit that subscribe button and give this video a thumbs up. We've got an exciting one for you in this video. Okay, we're just going to be covering what the range action verification index is, how it can improve your trading, and how you can use it to confirm range bound market conditions and make smarter trading decisions. Okay, now let us get started. Let us start by breaking down what the range action verification index actually is. Now, at its core, the range action verification index is a technical indicator designed to help traders confirm whether price action within a certain range is valid. So, if you've ever traded in a range bound market, you know that it can be tricky to make confident trades, right? Especially when price action starts showing some uncertainty or inconsistency. I believe if you've been a trader for a while, you should understand what I'm talking about, right? Now, the range action verification index helps solve that problem. It provides a clearer picture of whether the market is really staying within the expected range or if it is likely to break out or reverse. This tool helps you filter out false signals that might confuse your trading decisions. So think of it as a truth meter for the price action within a range. It tells you whether the price is behaving as expected or if the market is showing signs of a potential shift. Now that we know what the range action verification index is, let us just talk about how it works. Okay, when you apply the index to your chart, it essentially evaluates the strength and consistency of price movement within a specific range. It works by comparing the current price action against historical price movement patterns to see if there is enough momentum to confirm that the range is valid or if a breakout is more likely. Okay? If the range action verification index shows a high reading, that typically means that the price is moving strongly within the established range, confirming the validity of the range. Okay, but if the index shows a low reading, it suggests that the price action is weak within the range, which could be a sign that the market is preparing for a breakout or a reversal. Now you can see that here we had a low reading. Let's just be practical. We had a low reading around here, right? It was even in the negative territory. In this case, the market was preparing for a reversal. This was a bearish trend before. But as the index noted this low reading, the low reading even started from this point all the way. The color was red. You can see that the red color started from here all the way to this point, and then it turned to ash before the breakout was confirmed and the indicator turned to green. So at this point, the low reading indicated that a reversal was coming up. Can you see? And then eventually we had that reversal. The reversal eventually prevailed after a brief consolidation. After a brief consolidation, we had the reversal. Okay. Now, this verification process is crucial for traders who want to avoid entering a trade based on unreliable or false signals. By using the range action verification index, you can confirm whether the range bound movement is strong enough to trade or if it is time to wait for a clearer signal. Now, let's just dive into how to use the range action verification index in your trading strategy. The first step is to apply the index to your chart. Okay. Once you have added the indicator to your chart, the indicator will display a line. You can see this line. The line changes color, from green to ash and to red and to ash and to green. Okay, depending on prevailing, situation in the market. When using the range action verification index, pay close attention to its readings. All right. As we mentioned earlier, a high reading indicates that price action is strong, while a low reading signals potential weakness or the likelihood of a breakout or reversal. Okay, so you want to look out for periods where the reading is either increasing or decreasing steadily, as this can give you a clearer idea of market direction. Now the next step is to confirm other indicators. Okay, the range action verification index works best when combined with other technical indicators. For example, you might use it alongside momentum indicators like RSI or MACD, just to confirm the validity of the range. If both the range action verification index and a momentum indicator like RSI suggest that the market is in a strong range, that's a great time to consider entering a trade. On the other hand, if one of these indicators signals a potential breakout, it's a good idea to be more cautious. Now, as with any indicator, the range action verification index is not foolproof. While it helps confirm whether a range is valid, price action can always change unexpectedly. So be sure to use proper risk management techniques such as setting stop loss orders and never risking more than you are willing to lose on any given trade. So why should you use the range action verification index in your trading? Here are a few reasons. First, for improved accuracy. The range action verification index helps confirm the strength of price action within a range. By verifying whether the market is staying within expected boundaries, you can avoid false signals and improve the accuracy of your trades. It also removes some of the guesswork involved in trading in range-bound markets. When the price is moving within a defined range, the range action verification index helps you understand whether the market is likely to continue in the same direction. If the ash is dominating, if this ash color is dominating, there is a chance that the range is going to continue. But when you notice, the value increasing, the color turns to green and the positive territory, entering a positive territory, there's possible, chance of, a strong momentum, right? And the breakout could actually be near. Okay. Now, this index is actually useful across multiple time frames. Whether you are whether you are day trading or swing trading, it can help you verify whether the price is sticking to a range or ready to break out. So this makes it adaptable for traders at every level. By filtering out weak price action, the range action in the verification index helps you avoid entering trades based on unreliable signals. It gives you more confidence in your trading decisions, especially when the market is range bound. Okay. Here we can see that the price is trading within a clear range, right? The range action verification index is also showing a high reading around here and around here. Okay, indicating that the price action is strong within this range. Now, based on this confirmation, we can have more confidence that the range was, was valid and likely to still hold. Because if I'm going to extend this for a while, you can see that the range actually continued all the way to this point before we had a breakout. Right? So this is just one example of how you can use the range action verification index to make smarter trading decisions. Okay. However, if the range action verification index were to show a drop in reading, and that happened here, a drop in reading, that could signal that the range is weakening and that the breakout might be imminent. And guess what? Shortly afterwards, this is the range, right? This is actually the range. Shortly afterwards, we had a breakout to the downside. You can see after this low reading prevailed, we had a breakout to the downside. All right, traders, that is it for this video on the range action verification index. Hopefully, you now have a better understanding of how this tool works and how you can use it to confirm price action within a range. If you found this video helpful, make sure to hit that like button and subscribe if you have not done that already. I've got more trading strategies and tips coming your way, so stay tuned. Until next time, happy trading.